Wall Street's infamous dark pools. They are getting even darker. It's today's big take. These are private rooms booming by taking off-exchange trading platforms and adding another layer of exclusivity. To talk about what's happening under the surface, Bloomberg Finance reporter Katherine Doherty. You know, I was stunned by the data that you presented in this story. How have these dark pools gotten so big? These are not brand names. This is not the Goldman Sachs of JP Morgan's of the world, although Morgan Stanley is up there. These are names like Intelligent Cross and Blue Ocean and DealerWeb. Who are they? What do they do?
So each of these off-exchange trading venues, they have a flavor of what appeals to individual investment firms, broker-dealers that are trying to figure out where am I going to get my best execution. And this depends on the size of the trade, the speed at which they need to fulfill the trade, and oftentimes who they're filling the trade with. So the introduction of private rooms within alternative trading systems, dark pools, is given investors the ability and the brokers that are executing on behalf of the ability to really figure out where am I going to get the best execution because I know who is in this proverbial room, who is going to be the type of either market maker or broker dealer that is on the other side of my trade. And that gives just a little bit more certainty. Many of the market participants that I spoke to just talked about the fact that when you have the knowledge of who is potentially on the other side, maybe not a name, but the type of player that you're going up against and that you're going to fulfill your trade, that allows you to kind of sit back and know the type of execution, or you can expect the type of execution that you're going to get when the trade is fulfilled.
So what's the problem with private rooms? I feel like if I were a big institution, I might want to use those private rooms for certain advantages. Who's disadvantaged?
So the problems per se that have been coming up is this idea of transparency and the access to liquidity. So these dark pools, they do report their trading, their execution quality, and the volumes are very, very public. However, the volumes within a private room specifically are not broken out. So then that brings up questions of if you just broke out those specific, even by percentage, how much is happening within this private room? How many private rooms exist within these dark pools? These are a lot of questions that got brought up in talking to a lot of the market participants. Even those that use them are saying, you know what, some transparency about that wouldn't hurt, it might even help, because if you think about the access to liquidity on a dark pool, you might only get 70% rather than the 100% that you're expected to be playing around with and to access.
Let's double down on what this means for market liquidity, because really so much of this is a function of so much activity since 2008 moving away from the banks into unregulated markets. Some people say this is a good thing, the banks are constrained. Some people say, well, wait a minute, where's all the activity going? And does it make up, I think this is the most important part, for the lack of liquidity you would get from banks stepping back? How do you know the answer to that?
So these are regulated marketplaces. So I'll just start by saying that. And many of the banks actually access some of these or run. You have Morgan Stanley running 3 dark pools, their own ATSs. These private rooms are operated by smaller broker dealers that the cost to set up either a single dealer platform or their own ATS is not enough.
Alternative trading system.
Alternative trading system. It's not enough to make up for when they're doing the cost, the benefit. It's just too much. And so the private rooms allow them to basically operate in a way their own ATS, but it's within the broader dark pool and an alternative trading system that is an independent alternative trading system that's not operated by one of the big banks. So that's where you're seeing a lot of the move of, instead of the big public lit markets, the exchanges, NASDAQ and NYSE, many of the volumes have been moving. We saw it at the end of last year for the first time surpass 50%, so it's become the majority of trading.